So going to take the time in this video to go over a trade that I took this past Tuesday and held through Wednesday, wanting to really cover the steps and the approach that I'm taking to capture a weekly range expansion, going from opening the charts to having an idea, an expectation, then a confirmation, and then actually putting on that trade. On the screen now, you'll see the layout of the economic calendar for this previous week. And really, this is the first step that I'm taking going into any new week is the economic calendar. I'm framing this on Sunday before even considering what price looks like. This is what I'm doing. First thing I'm looking for is high impact news, non-farm payroll, CPI, FOMC press conference. Those are the three that I'm interested in because that's really going to affect certain days that I'm trading. Outside of that, it's more intraday rules and things I'm really not concerned with. And when I take a look here, obviously, it's an NFP week. We have NFP on Friday at 8:30. But also something else to note is there's a bank holiday on Thursday. And for indices, that's the market I'm trading. That means we have a close day on Thursday. So usually what I'll do on any normal NFP week without this bank holiday is I'm taking Thursday off regardless. It's a day that I'm going to be avoiding. And then after Friday at 8:30 following that release, then I become interested in the market again. And I go back and say, is there a setup for Friday? But on this week, I can already tell myself Thursday is a no trading day. Anything prior to 8:30 on Friday intraday is no trading. So my setup, if I'm going to capture a weekly range expansion, is going to be Monday, Tuesday, and Wednesday. And with that framework in mind, knowing that I'm only trading these opening 3 days, I'm really focused on Monday to put in a reversal and potentially on Tuesday. Any intra-week reversal formed after these 2 days is going to be uninteresting because I'm looking for that reversal to form in the opening day or the following on Tuesday, and then I can trade the expansion as a continuation on Wednesday. But if it's a profile like a midweek reversal when we're reversing on Wednesday, that's not interesting because I'm not holding a trade on Thursday, or I can't expect a continuation on Thursday as a day trade. So anything prior to Wednesday is where I'm looking for that reversal, and then I can trade the continuation after. Ideally, you get a reversal on Monday, and then you can put that trade on for Tuesday. So after the economic calendar is framed and I understand which days of the week I'm interested in, immediately I'm going to the daily chart because this is the time frame that is going to tell me everything I need in regards to direction and narrative and setting that initial framework. And when I take a look at indices here, they were playing a range going into that new week. In ES, it's a little bit clearer. So we have this high of the range that failed to get traded back to, and this low of the range that failed to get traded back to on this previous Friday candle. So when we open up that new week, the market is in a neutral condition. So I am basically waiting, and I understand these are the two levels that I'm interested in based on this condition of the market. And I'm going to allow the opening days of the week, Monday and Tuesday, like we mentioned on that economic calendar, to put in a reversal at one side of this range, and then we could trade it back. And I'll put a pop-up on the screen now of what my thought process was from this past Sunday. Like if I'm applying this logic of where's my setup going to form, because we're in a range here, and we didn't trade when I look at this side, did we trade into anything relevant that I should say, okay, we're now ready to trade away from that point? No, we fell short of this high. We look down, we fell short of this low. And again, we're going back to where's my setup going to form? And I need to say, okay, it's going to form at one of these 2 points. And I would be waiting for that as framework. And I think ideal, just considering that we are, opening closer to this low, that's easier. So now comes the easy part, or maybe the hard part for some, which is just waiting for one side of that daily range, external high and external low, to be engaged, because that's where we know a trade opportunity exists. And really anything that happens in between that high or low is irrelevant and should be completely ignored. With Monday printed on the chart, like I mentioned previously, this isn't a day that I would be trading. I look back on it going into Tuesday and ask myself, did Monday reverse at the external range? Did it expand through that higher low and now my idea is invalidated? Did it remain internally and now I have to wait for Tuesday? These are the things that I'm asking myself, and as I look here, Monday, obviously, it reacted off that external range low, made a reversal daily candle, so now I'm in the frame